Northwest Now is supported, in part, by viewers like you. Thank you.
A microscopic assembly of molecules changes American life. The COVID-19 outbreak is our new reality. Tonight, a Tacoma financial planner talks about the chaos on Wall Street and what that means for your portfolio. Our viewers are older, and we also know that the past decade has been extremely hard on savers who've been unable to get good returns on their investments in traditional safe havens for retirees. That has forced many of them to chase higher returns in the stock market. And during times like these, the results can be truly frightening, especially if cash flow is an issue. Joining us with more on that is certified financial planner Brad Berger. He's the author of Stop Trying to Keep Up with the Joneses, They're Broke Anyway, and the founder and CEO of Tacoma's Ideal Life 360, and an Ed Slott Master Elite IRA advisor. Brad, thanks so much for coming to Northwest Now. I want to apologize from the outset. We're doing the social distancing thing here, so it's not that you're not a good guy. We gotta do the right thing.
Totally understandable.
Good. So, Brad, give us your initial take on this whole thing. It has been brutal in the markets. Feeling like we're oversold, undersold, overreacting, reacting appropriately. What's your analysis of what we're seeing big picture?
Well, big picture, it's really hard to tell whether we're yet oversold. I would say from just a general viewpoint, there are plenty of opportunities out there for individuals who would be willing to take advantage and could stomach some more volatility that we expect is coming down the pike. But I do believe that this is a bit of an overreaction. That is not to suggest that I don't think that this is a very serious issue, but if you really look at the mechanics, the fundamentals of why this is happening, and the fact that I'm very bullish on America and its ability to handle this crisis and recover from it quickly, I think there's going to be some opportunity for individuals out there, again, that can take some appropriate steps.
And in 2008, 9, and 10, it seemed like that was going to be the generational opportunity for having great entry points in some of your investments. And really, if you look at it, here is another chance.
Right. For anybody who doesn't believe that lightning can strike twice, this would probably be another opportunity. One of the things that I would share with you, however, and why I'm very bullish on our ability to recover from this, the timing of that is a little bit unknown at this particular point in time, is because the fundamentals of how we got here and why we got here and the strength of the consumer and the balance sheets of corporations is significantly different. So back then we had a financial crisis that rippled into the markets. Here what we've got is a health crisis that's impacting economies that is now rippling into the financial markets. But as soon as we can get the health issue under control, the economy back running, companies are ready to go.
Brad, you're a great supporter of KBTC Public Television, and you know our audience.
Yes.
A lot of older folks, retirees, people in their 70s and 80s, and their children, like us. And you also know that a lot of those folks felt back, last year and the years before, they almost had to get invested into equities, into stocks, because returns were so terrible elsewhere in the marketplace. So now here they are, maybe in a cash flow crisis. How are you advising those clients if they found themselves chasing that return, but now stuck with really poor positions, at least on paper, in their equity positions?
Right. Well, Tom, I think you're very familiar with the team that I work with and work on with regard to this, and that is not a particular issue that we're having in our client base, because one of the very first things that we do in any of the comprehensive financial plans that we create is we stress test it. And one of the stress tests that we apply is a bear market. In fact, we'll do a bear market the day after they retire, just to make sure that they're comfortable and confident that when these things occur, because they do occur, and like this one, out of the blue, that we are well prepared for that. With that being said, it's an allocation issue, right? So when you have a comprehensive written financial plan, we know what your cash flow is, we know what your needs are, then we can plan for that. We can allocate to make sure that cash is available. Now, I recognize that a lot of individuals may not have had the fortune of working with a team like ours. I think it's incredibly important, but hopefully they're working with a fiduciary. And a fiduciary does have some restrictions about where they can put older individuals into their allocation. And the good news is not everything is falling. there are opportunities and portions of portfolios that are doing well. If somebody's self-directed and made all of those choices on their own, I would say, first of all, we need to look for liquidity other places, as well as when the dust settles, we probably need to get those sorts of individuals working with a qualified professional, a financial planning professional.
Yeah, I would encourage people to Google the difference between a wealth manager and a fiduciary.
Right. Well, that was the entire topic, right, of my 2015 book, Stop Trying to Keep Up with the Joneses, is this a misconception in the great American public, as I like to put, with regard to what a wealth manager is and a financial planner is.
Let's say an older person does find themselves in a cash flow crisis. They need to pay the nursing home or the rent or a medical bill or whatever it may be. Is there an orderly way to do this without it turning into a bloodbath?
Yes, I think that there is. The first thing that I would do is, as a last resort, when I go to my equity or income portfolio, what I would be looking for is creative ways to create other liquidity opportunities. Maybe it's the refinancing your home to reduce the payment. Maybe it's applying for a home equity line of credit, looking for other forms of credit, because again, I'm bullish on the ability for us to recover. And I want to make sure that individuals do not, sell at a deep discount something that I expect will return in relatively short order as soon as we get some certainty back in the markets.
I don't know how many people that you deal with here, advanced investors, what I might call them, who are trading options or maybe shorting this market. I think people also need to be aware of the fact that once that curve of infections turns, the upswing could potentially be violent and just as destructive to some people in the wrong positions.
Absolutely. First of all, we don't get into that, right? That because again, what we've witnessed here is how quickly, how violently, and how volatile the market can be, and it can be that in both directions.
Oh yeah.
I'm watching the news flow. My team is watching the news flow. We're having regular calls on this, and it's amazing the swings that we're seeing intra and inter-day.
Last 30 seconds here. We've had shocks to the system before. Is this just another one like Y2K and 9/11 and the financial crisis, and we'll get this one too? Or do you think this is somehow different?
Well, I think it's different because of what's caused it and the impact that it's had. The reason that I'm optimistic, even though this is a very serious health issue, is I'm looking at the underlying fundamentals of the companies that are operating, what their balance sheets look like, the very heavy cash positions they have because of the lessons that they learned in the last crisis. And that's why I believe that as soon as we get a little more clarity on the health elements of this, our economy will open back up and business will come thriving back.
I love your sunny outlook. All right, Brad, thanks so much for coming to Northwest Now.
You bet.